Hey guys, welcome to another video. So in this video, I just wanted to go through some really important things that I've been discussing for a while with my academy students and discussing with people that I talk to in general. And have some demonstration, look at a couple of trades, look at the fundamentals in deeper detail, and just have an all-round perspective on what's going on. Now, I'm currently in this trade CAD CHF, and I'm going to go through exactly what I was looking for. I guess you can tell from the level of accuracy of this entry that it was a fantastic entry that we had. Now, the market has been very exciting. I would say end of January into February, we've had a lot of movements. And if you check the previous video from last week, if you took any of the trades that I gave, you should be a happy person right now because they were really profitable trades. It was actually absolutely brilliant. Took advantage of gold myself. I caught it right from the top. Absolutely brilliant trade. If you can remember the entry for gold, it was the trade I was talking about, the one I got into gold right over here. Now, if you remember the video that I gave you guys, I told you I didn't trust gold over here. Maybe to put more perspective, I'm going to go to the weekly here. We'll take a look. I was looking at this weekly supply area here. And then on top of that, I was looking at this specific demand zone here on the daily. Now, as I was saying to you that if you listen to the video before, if you've never watched any of my videos, and especially haven't watched last week's video, then you wouldn't probably understand what I'm saying. But I was saying that I don't trust the price. We had an initial short here, but the price didn't return into the supply liquidity nested within this weekly area. This blue zone is the weekly supply zone. This white area is the daily demand zone. And I told you that until price gets here, I wasn't ready to move. And lo and behold, if you look at what happened, price pushed a bit higher. And then we've had this massive drop expected. I took a short from 1954 and I closed it at 1921 because that's all I needed. But you can see that the price has continued quite a lot more by another 620 pips at max. And it's still hanging around, even if you took it from the top or you listen to my advice not to trust the price and wait for this daily demand area, then you'd be looking at least right now, if you held the trade, 817 pips. So absolutely fantastic with gold. Now, speaking about this week, one of the things I like to do personally is I always like to look at, when I check the news calendar, I'm not really looking at the news for how I'm going to scalp a trade or, straddle the market like some people do. I like to look at it to just kind of give myself a focus for the week. Sometimes I look at a few pairs intrinsically. Now, for me, I'm a major pairs guy. It's got the most liquidity, all the way from Euro USD down to USD JPY, those 6 or 7 major pairs. Some argue there's 8, including Euro GBP. But I always like to have a look at those and see, what I can find. Now, this week, the focus of this week or the highest impact news for this week is actually not from the dollar, it's from the Canadian dollar this week. Now, the Canadian dollars I would say the Canadian dollar has been in my lens of focus for quite a while now. And more recently, when they had their recent rate hike, they went from 4.5% to 4.75. So 25 basis points increase. The interest rate is one thing, but I always like to listen to what the central bank governor says and whoever's with him as a part of his team, because what they say and the rate hike has two aspects that are both important. The rate hike from a data perspective shows that, in short, especially in the current economy we're in now, if you don't know why the interest rates have become so high, you can watch my previous video or in a brief overview, since lockdown when, there wasn't much work going on because people physically couldn't go outside because of this virus. And in essence, we had a very strong amount of unemployment happening simply because, COVID stripped a lot of industries of their productivity. And as a result, the government and central banks, especially central banks when it comes to monetary policy, had to step in to basically keep the economy from completely collapsing to the ground. So in order to do that, as some of you may know, they have to turn on the money printer. Now, money can come in, from foreign exchange by value exchange. So, which is how we calculate GDP as well, nominal GDP. We work at when goods and services are exported around the world from a country, the revenue that they bring in, the profit that they bring in, is what gives the economy its GDP, and is very strongly tied to the health of the economy, and then therefore the strength of the currency. So during lockdown 2020 to 2021, industries like the hospitality industry was an absolute no because of COVID restrictions. And so central banks had to shore out a lot of money in the form of debt, okay, in terms of credit, to give to everyone. Now, the last financial crash we had in 2008, it was a financial crash of specifically banks and institutions, but they had bailouts. So money was printed for them, but it was given specifically to institutions. The people who got burnt out, the lay people, or the Joe Public, as people would say, Mary Wallpaper, just the average people out there really suffered the consequences of mismanagement of these big banks and corporations. Now, in this lockdown situation, which is another financial crash, the way that central banks reacted was completely different. So broad money supply, or the money supply, M1 money, or M0, M1, that range of money was spread across the entire population of the world, because the average person needed money, because it's not like people didn't want to work or jobs weren't available. The actual environment wasn't conducive for work. And money is supposed to, or currency is supposed to be an exchange of value for some sort of service you provide. Now, in an absence of the ability to produce productivity, which is where GDP comes from, then the central bank will have to create debt in the form of printing more money, which means debasing the currency in order to supply the demand for money, for people to live and to work and etc. Okay, now adding on to that, as I said, I heard the fact, I said it last week, but I think it is true, that between 2020 to 2021, in this last phase now, the central bank, I don't ever call it the Central Bank of the United States, but that's I guess, without being a conspiracy theorist, this is what it's about. But the Federal Reserve, 25% of all the dollars that are in existence right now, well, I know quantitative tapering has happened, so that number's less, but 25% of all the dollars in existence was created during that time. So you can say that 25% increase in the debasing of, your $1 happened during that period of time. Now most people don't look at the economy in this way, and some people actually don't know how it works. But in essence, this is what was taking place during lockdown. There was a lot of cheap money, a lot of big institutions, corporations could borrow at very, very low, almost 0% interest rates. Of course, you do have to factor in also the fact that, we have, cheap money, well, there was cheap money all over the place. And so all of that borrowing, was definitely taking a toll on the economy for people who are, the poor, the middle class, and etc. So that mixture of what's going on, and then if you include what happened with Ukraine and the situation with Ukraine and the supply shocks that we've had around the world, which hasn't actually returned to normal. There's a lot more demand than supply, and sometimes a lot more, to be fair, it's really more demand than supply. And this is why prices are high. This is why the consumer price index, or the cost of living as we're calling it, but the consumer price index, the average cost of goods has increased dramatically also. And it's all for these same reasons. So coming back to Canada, before I go through the technical analysis, Governor Macklem was talking about the fact that there may be a conditional pause, because the whole point of raising interest rates, and I'll end off with this stuff just after that, is interest rates are raised to slow the speed of the economy in a general sense. Now, it's a lot deeper than that, but we haven't got the time for that. But in essence, by raising interest rates is in an attempt for central banks to stop people from borrowing and get people to, in essence, use the money more for productivity, for spending, for investing, rather than for just taking out loans for different things. Because, an average person might take out a loan for a car, for a house, or etc. Some people may take out loans for productivity, which also is important. And you've got this mixture and cocktail of different types of borrowing. So by raising interest rates is to discourage from the highest levels of institutions down to the average person to not want to borrow. And obviously, because the economy is tighter, people are trying to borrow no matter what the rate is because they need spare cash. So that's another story for another day. But this is in essence what it's trying to do, to kind of bring inflation back down and slow the rate at which the expansion of money is flowing, in essence, slow the money velocity down from coming from banks. So speaking about what Governor Macklem said, I would say personally, looking at the rates, I've seen that the CPI for Canada has been going down, because his rate statement that he said, or what he spoke about, I watched it live, is in essence that they may not hike interest rates. They want to see how much, from 25 basis points or 0.25% during the height of lockdown until where we are at like 4.75. He wants to see how much that 450 basis points hike has had an effect on the economy. If they see that in the Canadian economy, the interest rate hikes are starting to work, well then, to be fair, they won't have to raise interest rates just yet. But it's not completely a fact. He never said they're not raising it again. It's just conditional. For me personally, seeing how the Federal Reserve was talking, which was last week, I don't really see why Canada would not be raising their interest rates, maybe in line with how the Federal Reserve is. To me, I still think inflation is persistent and the job is not done yet. There's still more things going on. And now that there's more world disasters, like for example, even stuff that are maybe not completely connected to the economy, but could be, disasters like Ukraine war and etc., will continue to have more effects on the world. So we'll have to see. For me, I think we're getting to a point where if this conditional pause does happen and they do pause interest rates, I don't know how the market will take it. It will also depend on the CPI and, GDP of Canada and things like that. Even smaller high impact news pieces like retail sales and etc., just to gauge what's happening. But this is in essence what we have going on. So now from a technical side, as I was saying to you guys, that whenever there's news or high impact news, like data news, maybe not speeches per se, but more data news, I'm always one that I would, start the week Sunday night, having a look at the charts and looking at the technicals first, because technicals always leads fundamentals. I always want you to remember that. The technical money, if you want to put it this way, money moves first before the news does. Before, anything happens and they mention anything, the reason why they're taking the decisions they're taking is because they're actually analyzing the pricing of markets. They're looking at market pricing and a much more a lot deeper in terms of fundamentally, but they're looking at all the facts and figures, all of their data models. There are many PhDs and very intelligent people that work in the central banks of the world, and their whole job is to make sure that they understand the financial markets in developing countries, Forex, you name it. They're all across the board to make sure that they keep the interests of the economy that they're working for in check. So why am I saying that? Well, to be a good technical analyst, it's important for you to understand how institutions, how governments trade, and how the algorithm of the market works. Because in doing so, you'll be able to capture trades like this. So for example, I've got CAD CHF right now. You can see the entry that I have, which I'm going to explain in a minute what I was looking for. You can see I'm writing at the top. I don't think you can get any higher than that. And you can see I have a brilliant sell. My target is just simply here. Now, this is my funded account. Okay, so I'm about to pass the evaluation with this trade. And I want to share it with you guys so you guys can see what I've been doing. Now, for me, looking at price action before news is always important. I don't trade on the news. I see the news times, for example, for me in the UK, the news on Friday, which is the main news we're looking at, happens at 1:30. For me, I'm using that as a time to see where volatility is going to increase to push towards my target or for me to get out beforehand. I'm not using the news kind of like to work out the figure, and if it's higher or lower, I'm going to put a buy stop or a sell stop to try and capture a scalp, because that doesn't work. And the algorithm of the market is very intelligent. And over time, I've been a trader for many years, 7 to be exact. And, over time, I've seen how the market has evolved. That strategy of, trying to scalp the market for news used to work. It still works sometimes. Don't get me wrong. Like, for example, last week, if you took the news on Friday, NFPs, you could have took this movement here. But brokers themselves and also the market are very intelligent and know that traders, can and will try to scalp the market where they can. And the aim of the market is for you to lose money, unfortunately, as a retail trader. So you have to be very wise with your decisions about how you trade and what you're looking for and your level of understanding. I had the privilege of working with institutional people, and they're still my friends. So I've had the opportunity to be baptized into understanding how institutions think. And it's always totally opposite from how retail traders think. Otherwise, they won't make money. And that's just the truth of the matter. So this trade I'm in is highly accurate, and I'm just going to go through what I was looking for. So starting off with this trade here, I'm just going to open up a fresh chart. Let's take a look at what's going on. So CAD CHF is over here. Now I saw this trade at the beginning of the week, or early in the beginning of the week on Tuesday. But Monday, I was kind of perceiving that we're definitely going to have an entry here. And I'll explain why I'm in at the wicks specifically here in all of this in a moment. But I'm going to use the H1 because don't need really much right now. But if I go over to this area here, all right, I'm just going to go over and show you what I was looking at. So on the H1, and I'll zoom out. So I'm going to go the opposite way. Now, usually my mode of trading is I start from the highest time frame first and then go down to the lowest. It's just a law of orders of magnitude. The higher time frame has stronger bearing on the direction of the price than the lower time frames. But there's this very nice H1 demand zone here that the price was working with. And if we track demand, we had an induction for a long over here. All right, then we had the price breaking market structure in this range over here. And then before you know it, the price returned back to this demand zone to initiate the entry. Now, as the price went long, which is when the NFPs happened, this demand zone candle was the hour before. The next session, you can see the price produce a massive long, okay? So in terms of tracking where the demand is concentrated, at the moment, demand is concentrated right here, all right? So I'm just gonna put this a H1 demand zone, okay? And I'll put this as number 2. So the reason why my targets are here and I'm not going further is not because the price couldn't go further short, and I explained to you why, but simply because looking at the price action from this angle, this will be a safe place to come out because there's much reason for the price to possibly go long one more time. Okay, now one of the things I did cite out is that we have a pool of liquidity here, especially equal highs, which is an algorithmic signature, and the price will come back here at some point. But looking at the structure now is when I'm going to zoom out. Now, unfortunately, this is not trading view. So with MetaTrader 4, at least, MetaTrader 5 is a bit better, but MetaTrader 4, you do have to use another time frame. If I go from the H1 to the H4 right now, this is what happens. So if you're wondering why does he keep opening another chart every single time he talks, this is why. And this is one reason why sometimes I don't like to write on there. But anyway, if you go back a couple of weeks, so mid-January, the price took the high of this previous week. We had market structure break over here, which this swing low is the last swing low before the price did what it needed to do. So I'm going to drag this over here. And then we had the price returning back over here into supply. Can't tell from the H4 that is in supply that there is supply liquidity here. And the price has produced a short. Now, importantly, the body of a few H4 candles have closed beneath the low of the previous week where this inductive move happened. Now, why is this important? Because it gives you an understanding of the direction that price wants to continue short. Not forever though, but at least for now. So the trade I'm in right now is basically, if I was to use foundational technical analysis here, if we go for swing points, if I took an A right here, this is the A swing. Now I usually write my A's and B's uppercase or lower, depending on the time frame, but just to make things quick, I'll put this here. This is A, this is B, all right, lowercase. And so the swing point C is where I'm looking at. Now, you could use a Fibonacci for this. Personally, in the Wealth Group Academy, we use a modified Fibonacci, which is based on the algorithm of the market. So the levels are not the same, and there's certain levels that we don't use. Okay, but that's not even important really to use for this case. So at this C swing point here, coming back to the H1, there was another inductive move. So on Friday, at the end of this bullish movement, the price took the high of the previous day. And then we see that the price broke structure right here. And for me, the trade that I wanted to take was the return. So I drew the supply zone on the H1. I actually took this from the H1 and looked at the 1 minute time frame just to give me a little bit of clarity on some things. So here's the H1 anyway. And let's look at this in a little bit more detail. So initially, the price returned here at 3:30. If I hover over this, you see that it says 5:30, which is the server time. I'm in the UK, so we're 2 hours behind server time. So it's 3:30 in the morning. Now, I was actually up because I am a programmer as well. I write code for MetaTrader 4, MetaTrader 5, blockchain stuff, JavaScript, a whole load of stuff, React. Okay, but when I saw this, I was actually wanting to get in because I felt a bit like, damn, I need to get in. But I took some time to think about it for a moment and didn't react to my feelings. And the reason why I didn't react and take a sell, because I had a pending order, to help you understand why I was saying that just now, is I had a pending order, as you can see right here. This triggered from a pending order. And I've specifically put it here because this is the beginning of supply. When I put this pending order here, I was so annoyed that it didn't trigger. I thought maybe the spread got me in this case, and there was a little bit of spread, so it didn't actually trigger until it hits the actual bid price. But it didn't do that. Because we're in Asia, this is specifically an algorithmic move. CAD CHF is the Canadian dollar and the Swiss franc. The Swiss franc is a European, or in the European zone of the world. So from around about 8 o'clock until 5, that's the time when, the European liquidity is there. There's volatility there. And Canada is from about 1 o'clock. It's about 1 hour. Toronto's about 1 hour after New York. So about 1 o'clock right now, until the evening time, like 9, until New Zealand takes over, and then Australia, etc., and back in Asia. So because this spike happened in Asia, I had the confidence to know that looking at this, there will be a re-entry within the London session. So if you look at this price action here, you can see the price started to go short. Now, I want you to understand the mind of the market. So think about, if you're a market maker and you want to make as much money as possible, in order for you, the direction is going to be a short, but in order for you to make money from the short, you need to get people going long as much as possible. So to entice them, we have this trade here. This is the Asian session. Now, when the London Open happens, there's a change and a shift between who's really driving the liquidity of the market. The brokerage houses, from London Stock Exchange, or the London European Stock Exchange come into play. Asia is going to sleep. Now, the last time for Asia before it shuts is 7 o'clock. So if I go here, at this red candle here, these two candles, so at 7 o'clock, maybe pushing it to 7:30 when it's late at night for them, unless they stay awake, the last thing they're really seeing is the price descending here. And if you took a trade from here, you've done pretty good, especially because the price spiked into your entry. So you're about 15 pips in profit and the price is descending. So let's just imagine you were going to sleep at 7 when the Japanese session ends. Seeing that would make you feel like, oh, I'm in profit, I'm doing good. And maybe you might drag your stop loss to even just before, to stay in case, because you're going to sleep. When you wake up, what does the market do? The market comes a few pips, literally probably about 2 pips above this high, triggers again, and enters into the same supply liquidity. But now we're in the London session. So now the full-blown liquidity that we're looking for in terms of a trade has happened. As a result, the price descends down and we get this beautiful short, which we're in right now. So think with me for a moment. Asia officially starts at 9, and Japan, Tokyo starts at 12 midnight UK time. So if you track along here, the last candle before the new day is here. If let's say you just woke up at 9 o'clock as a Japanese or trader or Asian trader, no, I'm not trying to shade Japanese people. It's just I'm just thinking in those terms because of the time. But if we look at what we have here, by the time you wake up, you would have been stopped out if you put your stop loss to break even, and you've got here and you thought, man, I was right and I got stopped out. I'm so annoyed, and then tried to get in again. And then even if you did get in again, you would have had probably a good run, but the amount of profit you would have made compared to what the algorithm of the market made from top to bottom would be a lot less, possibly, because especially if you're taking this trade from here in a bit of an unstable place, you would have had to put your stop loss quite wide. So the risk to reward wouldn't be good. Okay, so this is in essence what I was thinking about why I didn't take this trade, and I didn't move my pending order, and I didn't try to take the trade early, because when it got down here, I thought, why don't I just put the sell and put it above here, and whatever the weather. But I wanted to stick to rules, and I stuck to the rules, and I've got the result here. So I've had to swing this for a day and getting towards 2 days now. It looks like the price will probably hit this today. If it doesn't, it's not really a big deal. To be fair, my take profit is slightly a bit more than what I need in order for me to pass my funded account here, but I'm still doing it anyway. If the price, I think my take profit, let me see. My take profit is about 1K. I think it's 1,000. Let me hover over and see. Yeah, 1,053. basically. I only need, I think, $1,000 or less to pass. So if it gets to the passing number that I'm looking for and how much I need to do to pass this account, I'm just going to take the profit and run. There's nothing else really to say. So this is in essence what my trade was. And, you know, looking at CAD CHF and discussing where I think the price is going to go in terms of the news would be something that we can, looking at this, you could probably see that why I want to close here, because the price may decide to go long for the news tomorrow, who knows. But let's just take a quick look at this. So if I take CAD CHF again, and I'm just going to start from, I'll take the H4, it's all right. I'm going to delete all of these lines because we're done here. Now, CAD CHF, in terms of the higher time frames, now let's look at this. It's in quite an interesting place. The price has taken the low of the previous year, and we have had a break of market structure also on the previous bearish structure of swing highs. So as a result, now the swing highs are not on this time frame. So if you're in the comments saying that that's not a swing high, I know it's not. If we go down to the daily time frame, this market structure break, this is a swing high here. This is where it is. Okay, this is the main price. That this candle where my mouse is, or hover over it, or if I put an arrow here, this is the swing high right here that I'm looking at, that the price broke structure on, which on the D1 time frame is fine for it to do. So looking at what the price is doing, one reason I don't want to stay in the long, stay in the short, is going down to the H4 now. If I take the low of this induction spring here, if I draw this area right here and I zoom in a little bit, I'm going to draw these two lows here. These two lows here, if you notice what the price has done, when the price took off for a long after taking the low of last year, the price failed to return twice to this demand zone. So it's left what will be called an unfulfilled efficiency. So the efficiency hasn't been fulfilled on this price action. So unfulfilled efficiency, yeah, of demand. So looking at the price action from here, from this angle anyway, this would have been my entry point anyway for this trade. If I was going to go for a long, which I'm looking to do so, my entry will be here and my stop loss will be beneath the low. That's what would be my target. Now, thinking about what the market has done here, in order for this to happen, let's look at what we've got here in terms of retail trading patterns. So as a retail trader, what would a retail trader be thinking about? Well, on the upside, we have this really nice bearish trend line, which will make a lot of traders think that the price is actually going short. And not only to add, but in terms of swing points, it's quite clear that the price looks like it's making not just lower highs, but lower lows here too. So what could the algorithm of the market do? Well, if they want to go long, what could they do? All right, so if I was to do this, I'm going to draw this line. All right, I'm back. So if we were to draw this line over here, we get a channel. Now, this is a common retail trader pattern. This pattern here is an equilateral triangle. Now, there's three different types of triangles, at least common ones. I mean, right now, sometimes traders make crazy patterns that, you know, the bird pattern, the koala, I've heard all sorts of strange names. But in essence, there's three types of patterns. You have two right angle versions, and then you have an equilateral one. So make it very short and sweet. Okay. In an equilateral pattern like what we have here, the traders could either be looking for the price to break out above or beneath. So there's a bit of an ambiguity. What they're looking for is whichever side breaks out or doesn't break out. So for example, right now, if this H4 candle broke outside of this trend line, let me make it a little bit more accurate, then they'll be looking to sell and the stop loss will be above. Basically, where my stop loss is or just above would be their stop loss. And they'll be looking for about 2 times the distance from here to the breakout. So if 60 pips is the distance, they'll be looking for 120 pips on the short side. If the price breaks out above, then stop loss will go somewhere beneath here. and they'll be looking for 120 pips on the upside. That's how an equilateral triangle works. The other two are these ones where if the price breaks above here, then you'd be looking to buy. So if the price breaks at this point here, you're looking for a buy trade, and then the reverse of this. So this is what we'll call an upwards wedge pattern. This is a downwards wedge pattern, basically. If the price breaks out at the bottom here, you'd be looking for a sell, basically. I'll make this a different color so I need to stop saying basically, but you guys get what I mean. Is the British boy in me. So looking at what we have here, what could the algorithm of the market do? Well, we have unfulfilled efficiency here, which is true supply and demand. The market order book needs to be balanced here. So there's two options here. If this, and this is in regards to the news, the Canadian dollar news, if it is negative, okay, well, the price could spike down here with the news. For example, if it doesn't reach here before Friday, spike to this area here and then completely reverse the other way. Now, if they want to do this, why would they do this? So if you think about this, if they want to entice people in the selling direction, well, then they're going to have to create a scenario that looks very much like the price is going to sell. So the other option would be is that the price may actually push up. So after my target, which is what I'm aiming for, which is at this area here of H1 demand, is a very strong area. The price may decide, okay, I'm going to push along. Okay, because remember, there's equal highs over here. If I didn't mention it before, there are a pool of equal highs here. This is a liquidity pool that the price is attracted to and it may come to. So the price could even actually spike up the other way and get people thinking we're actually going long and then push the price down. And this is if it happens before the news. So where my target is, if price starts going long and then on Friday we're somewhere here, the price could then shoot down for a very quick spike down here and then back up long. Okay, the key here is to entice as many people in the wrong direction with the news, which is what I learned from institutions. This is what they do. Institutions don't use news to get into trades. This is an important thing. They only use the news to get out of trades. So all of the market modeling they do, a lot of the time they're holding trades for many months. They're swinging trades or they're doing high-speed algorithm trading, which is a few seconds. And so by understanding what the news is most likely going to be, and then of course their own whatever technical analysis they may or may not use, because some of them don't use technicals, whatever they arrive at and what they deduce the news is going to be and what effect will have on the price, they'll basically set themselves up to come out of the trades that the positions they are. So they'll use the liquidity and volatility of retail traders, especially dumb ones just jumping into the market, to use them as exit liquidity to come out. So this is the way I always think. Not even I would say I like to think, I do like to, but I always think because this is how the market works. And so we have these two dynamics here. Now, the other thing is if the price gets here before the news, and let's say, for example, on Thursday, the price gets here, I would place a buy and see what the price is doing for Friday. But let's say on Friday, the price gets here at 129 because the news for me is 1:30 UK time afternoon PM. If the price gets here like 1 minute before the news, I'm not taking it, because that might mean the price will spike even lower and maybe do a deeper enticement and get people to think, well, the price is definitely going short before returning for another spike. So these are the thoughts that I have when it comes to CAD CHF. All right. For me, I'm trading right now to make sure that this is my funded account. I'm going to pass the evaluation today, basically, with the trade I'm in. And that's really about it. So for me, I don't want to try to cross boundaries and hold on to this trade for longer and see what's going to happen. I just want to kind of get in and out. You know, I've put the work in, and the same mindset that you should have. So this is my kind of thoughts and views. Now, speaking again about Canada, the employment figures, which I'm just going to look at the end, really look quite crazy, the expected result. Okay. But before we do that, as I said, money moves first in the market before the news. So let's have a look at some other pairs. Now, the other pair I'm looking at, you know, you can do this too. I'm not going to go through every single pair. The next one I'm going to go through is pound CAD, which is my other favorite. Okay. I'm also looking at CAD JPY because it's a pretty good one, but let's just quickly go to pound CAD and grab it here. So pound CAD, why am I looking at it? Well, the interest I have with this pair is that, okay, no auto trading, is that the price has taken the low of the previous month, which is an inductive trigger that can produce a long. Okay. if you're looking for where demand liquidity is to support that, we have a demand zone here, a supply zone that price has been using. Price has broken the zone and is using supply as demand. So that's where the liquidity is being derived from. Now, I do think that pound CAD is going to give us a brilliant long, and the key that I'm looking for is at least for one market structure break before I start looking for a pullback for an entry. Now, the price has been flirting with this high for about 2 or 3 hours now. And if the price breaks this structure I'm using the H1, I'm sure that I want to keep it to the H1 just because we need clean and clear market structure breaks to really take a move. But the next swing high available is not until another, if I take it from where we are, we're at 162, 162, another 171 pips away until the next swing high. So there's lots of room for a long. And if the Canadian news is negative, which means pound CAD would go long, we could see the price actually reach here or even higher. The next one is a new spike, which is this one, which came, if you're not too sure, I just have a photographic memory. This spike here is from the news that came out for the interest rate decision for the pound. It happened on Thursday last week at 12 for me, midday, but maybe a different time from where you're watching. And then we also have the swing high, which is the high of the day, and then this one, okay? And then very interestingly up here, these highs or the daily highs here are equal. So another pool of liquidity that the market will be magnetized to at some point. So pound CAD is probably one of the obvious charts to let us know that what's going to happen to the Canadian dollar. And if that is the case, then CAD CHF might actually push further short before, it does anything. But for me, because there's a possibility it could go long, I'd rather just take my profit from here. But pound CAD to me is a brilliant trade. And, the Canada has been quite an interesting one in terms of the world economy. It's a very important economy because in terms of oil, a major aspect of its GDP is from oil. It's probably one of the top 5 producers, if not one of the top 5 producers of oil around the world. And we know that even though we are pushing towards green and renewable energy, the world still heavily relies on oil, not just for energy, but just to be able to create products that we need for everyday things, bottles, plastics, even though we're trying to end that, but still. Oil is very highly in demand at the moment and is not going out of demand for a very long time. So having that, set in motion is interesting to see what the market has to offer. And that's why I think with pound CAD and my other trade, I'm looking at CAD JPY, I would love to trade the news and kind of get a feel for what's going on. Now, CAD JPY, which is my last one before we take a look at the news here. So I'm going to bring up CAD JPY. These are my 3 top CAD pairs I'm looking at. So CAD JPY did something very interesting. In fact, all Japanese yen pairs did something very interesting and a bit mean because I got stopped out on my trading account, but on my other accounts, it was pretty good what happened. But they all gapped up by at least 100 pips. Okay, this was 83. USD JPY did something also. We had Euro JPY, quite a few. But anyway, I was looking for a short, and my short was based on the fact that we have a weekly induction for a long down here. Now, again, my bias for all Japanese or ex-JPY pairs is still bullish long term. And it is technical, but it's also highly to do with the fundamentals of Japan. Japan, 70% of their GDP comes from exports. And so the Japanese currency within the Japanese central bank is treated in a way that is very tactical, in the sense that they always debase their currency in a way that keeps it lucrative and competitive against its, world competitors for exports like China. So Japan tries to keep its interest rates the same and negative, and also make sure that they keep their currency relatively weaker so that, countries that import a lot can actually exchange, the yen for whatever currency and do business, which is what they need. Okay, when you have a country where more than 50% of your GDP for your country is from exports, you need to do whatever it takes to your currency. So Japan's model is not trying to be the strongest currency in the world, it's just trying to be the most competitive currency in the world. Other countries have different ethoses behind it. For example, the Federal Reserve, the dollar is the world reserve currency for the world. So its standpoint and what their goals and to achieve are slightly different. There are aligned goals that central banks have, like keeping inflation at 2%, unemployment at 2%, all of these different things. But when it comes to how currencies are managed, these are some of the important other aspects of Forex which are important. So looking at CAD JPY anyway, we had this gap up here, and the price produced quite a brilliant move. So for me, I'm still in the long in terms of the bias in my mind, but we also had this really nice induction here on the north side, okay? And price then gave us a market structure break right over here. And when the market gapped up, the price returned to the supply zone, which would be an entry for a sell, and which is what it's been doing ever since then. So having that in mind, this sell here is a counter trend trade for me for price to get back down to this point, which is where the major direction is for me, looking at CAD Japanese yen. So I'll be looking to go for a short. So in terms of out of the three pairs that we've looked at least for sure 2 out of 3, which is pound CAD and CAD JPY, are confirming that most likely the Canadian dollar news is going to be bearish. Now, looking at the actual figures, when you see it in a moment when I pull it up, you're going to be really shocked at what's possibly going to happen, but I'll leave that for the end. So now that the price has returned here, I did take a sell. I used a 30-minute time frame to do it. One of the coaches in the academy, the Wealth Group Academy, the junior coach Matthew, he gave us this trade. Very simple 30-minute demand price cap. Price broke the other way. I got in literally right at the top here, 98. I think I got 98.78, something like that, and took a short here. Now the price is kind of paused almost in the middle of nowhere. It's not exactly in the middle of nowhere. It's in this supply zone area here. It's a supply flip zone, so price is using it as demand. If I use the wick as well, you see what I'm looking at. That's why the price stopped here, but I still look for the price to continue going short. You know, at 7 o'clock today, which is the end of Japan, in terms of the end of the Japanese session, coincidentally, the price gave us a re-entry into the London session, and the price has been going short since then. Okay, so I do think the price is going to continue short. It might even go a bit higher, but I'm looking for another sell that will take me all the way down to my target. Now, what is my target? Well, my target is the low of the NFP. Now, one of the things I want to say is that usually when there's high impact news across several weeks, a lot of the times, especially in a reversal, the target, for example, for the Canadian dollar news movement, like the end of it before it starts to taper off, would be the entry for the long of the NFPs. This is the NFP news right here. So I'm going to put this NFP news, NFP news. I'll just put the date as well so that it's clear. This is 03/02/2023. That's that. And then over here, which will be Friday somewhere, let's just say, for example, the target now, so the entry for the NFP news is here. So this is entry. This entry would also be the target of the CAD news if the price goes short to that direction, which is usually the case because that's how money works in the market. So if I was to take this sell, which I am going to, my target is literally going to be down here. I have further targets, of course, which will be all the way back down here, but I would at least target this area here. So these are kind of 2 good trades I'm looking at, and you know, you can work out some entries you can go buy as I've shown. You can watch this video over and over again to get a picture of what you want. But this is really, in essence, what I'm looking at. So always remember, guys, technicals always leads fundamentals. Money moves first before the news does. You know, central banks look at, you know, figures and the market to be able to give up why the interest rate might hike. So it doesn't make sense for you to wait for the interest rate first before you react. It's better you look at the price first and the market first before, and then you make your decisions from there. So finishing off, let's take a look at FX Street quickly and see what's happening with that. And I just want to show you why I do think the Canadian dollar news is probably going to be negative. So finishing off, now mine is set to, and when I say mine, I mean the economic calendar. My economic calendar, the times are set to my UK time, GMT time. So if you want to change it, you can do. If you just click on this button, you can go over and press set automatically, and it'll work out where you are in the world and sort it out. Okay. Now, the other aspect of this as well, which I want to say, is that I use FX Street. Now, some people use Daily FX, and if you want a more animated version, something a bit more interactive, Daily FX will be the perfect one. Or if you just want a staunch one that just says, look, tell me the news, when is it, what is it going to be about, consensus, previous, and actual, you can use Forex Factory. Okay. Now, sometimes I may use a few different ones just to see if there's any difference between things, but in general, you don't need, you only need one. Okay, one reliable one out of those three will do. So here's the Friday news anyway. So what we've got here, very interesting, is that for January, the expected net change is 15K. So they're expecting it to be 80, let's say 89,000 people less, because the K means 1,000, so 89 times 1,000. So they expect 89,000 less people to have employment this month of, well, this is for January. Remember, with news, is usually a month lag. Right now we're in February, and of course they couldn't calculate February in February. They'll have to wait for the end of the month to tally up the results. So this result right here, 104K, is actually for December 2022. Now, if this number is true and it actually comes out to be 15K, this is instantly negative for the Canadian dollar, and there's no saving it from the Canadian dollar, devaluing on Friday at 130. On top of that, we also have an expected change in unemployment from 5 to 5.1. And as I always say, the 0.1s and the decimal points always look weird and small in reference to news. But this 0.1, if you times this 0.1 by the total population of people looking for work or people out of work and in work, and you times by 0.1, do some calculations to work out the figure, this 0.1 could represent hundreds of thousands or even millions of people compared to the size of Canada and their population, okay, which does make a very big difference. The 0.1s, even 0.05 does mean a very big different outlook sometimes, especially for foreign direct investment and etc., what their actions they will take. So for me, how I'm seeing this is that if this number is actually 15K, I think anywhere from 15 to 50 will be totally bad. From 51 to like 75 will be like, nah, it's still bad, but it's not as bad as we expected. So we might get a positive Canadian dollar. And then the last range, 76 and above to 104, would be like, whoa, positive, that's not so bad. And then anything above, of course, the answer, better than expected means a bullish Canadian dollar. So there's a very dangerous potential here that we might get a very strong and unexpected Canadian dollar movement on Friday. And this is why I focus on it. So I hope you guys have something to take away from this. And I hope you make sure that you do pay attention to the news times and you don't forget and don't put a stop loss and you get stopped out, because that'll be the worst thing to do. But you've taken in this information. Watch this video as many times as you need to, and make sure, of course, that you like and subscribe, share with your friends, let everyone know what we're doing here. And let me know in the comments if you took any trades or what you're looking at, any questions. All right. Please check the links in the bio as well. I've put my GitHub repository. As I said, I'm a programmer. I've put a tool out called the Close or Open Orders tool for MT4. I'm going to put the MT5 code later on my GitHub. You can play around with it, read the code, learn. You can download the actual file and actually drag and drop it. It's a script, and it helps you to be able to close, all your trade orders simultaneously, which is very useful if you're a person who's a scalper or you take multiple trade entries. So I hope you guys enjoyed that video, and I'll catch you guys later on. Everybody take care and have a great day.